Okay, so that's why I didn't have any comments. I was wondering why in the heck I didn't have any comments. Golly, thank you everybody for hopefully people show up. I had some technical difficulties, and hopefully hold over here for a little bit and answer you as many questions as possible. As many questions out there as possible. I would like to answer here. Okay, so let's take another question. Do you see renewable energy stocks ever being viable? Well, here's the thing about renewable energy. Renewable energy is great in many ways, but the problem is renewable energy depends very, very heavily on government subsidies. So the minute you take away government subsidies, unless things change, in the minute you take away government subsidies, these stocks struggle. Now, if you're in the third world and there's not a lot of infrastructure, there's not a lot of electrical infrastructure, then, solar and everything like that makes total sense. It's a great thing. But in the first world, it's just not as viable. Here's the problem with renewable energy. Now, I wish I wish this wasn't the case, but with renewable energy, in order to create a reliable power grid, if you use significant amounts of renewable energy, you have to build backups that are based on burning either coal or gas or some other fuel like that, or nuclear. And this has been a major, major, major problem. And this is exactly what happened in Germany. Germany is hostage, basically, to the Russians right now. Why? Because they listened to some very, very foolish people. And the foolish people were the Green Party, which, by the way, is subsidized by the communists. I mean, I'll probably get banned for this, but it's true. And they said, "Oh, we're going to go green. We're going to have everything green." Well, the problem is they don't have they can't run their electrical grid. Why? Because they get all their they basically the solar is not doing it for them, the wind is not doing it for them, and they need backup power source supply. But they've gotten rid of a lot of their coal generation, a lot of their gas generation. They're dependent on the Russians for gas, so they're really in a tough spot, and it's just totally preventable. But you, as an investor, can benefit from this. And the way you benefit from this is look at the oil companies, because far from being bad, they are what, for the last 120 years in this world, brought us out of abject poverty. Because before oil, before gasoline, before diesel, before gas, it was a tough world. It was a difficult world. We had to depend on, we had to depend on wood. We had to depend on, other things like that just weren't as reliable. And the modern world is based on hydrocarbons. It still is. Now, we're going to be moving away from that, but right now, you got to go where the action is. And where the action is right now is the oils. That's going to be just the way it is. Um, Thank you very, very much, Gene. I'm sorry I had a little bit of technical difficulty. Thank you for putting up with my problems here. Let's take a look at one of your stocks, WPM, and let's go there. And that's wheat and precious metals. Very good. By the way, this is interesting. This is a good gold play. This is a Canadian company, and it has been very good in terms of in terms of return. Now, right now, unfortunately, I don't think it's really showing a very good entry point, and that's mainly because it doesn't really have a base pattern. So let's see if we can go over and find on the technicals. It's basically right. It's a little bit. It's right at the 10-day line, so that's okay. It's in a good industry, but would I trade this long term? Well, it is showing some nice action. One of the things I like about this is that the 40-day line has moved above that 200-day line. That is showing strength, obviously. Also, if the price of gold does go above $2,000, we're going to see a lot more strength in this one. This is a leader in the category, and the category is actually quite good. It's 15 out of 197. So definitely could look at this. But instead of wheat and precious metals, I just want to kind of direct your attention over to one of my favorite stocks in the gold space, and that is FNV. That's Franklin Nevada Gold. And the way that works is that is also a very strong stock. But what I like about Franklin Nevada over the other ones is that Franklin Nevada does not mine gold. It owns part of productive mines. So when the price of gold goes up, Franklin Nevada usually has outside returns. Let's kind of take a look at it and see kind of what I'm talking about here. This has a very strong stock list. So instead of Wheaton, I'd probably look at Franklin Nevada. I really, really would. It is a little bit extended over the buy zone right now off of a double bottom pattern. But because of this high that we had over there, I think this is much more buyable right now than Wheaton is. Just because of the way the chart looks. But this is one I think they're both buyable. Both Wheaton Precious Metals plus WPM and Franklin Nevada, they're both buyable. But I like Wheaton a little bit better. All right, let's get back to kind of what I was showing you before. My whole thing messed up here. And that basically is, I did make a buy on Shell today, and Shell basically moved pretty nice. It moved above the 56.23 buy point, and that definitely kind of is working. I definitely think we're going to see more strength in some of the oils, and even from here, I'm loading up on oils right now. Here's a look at the Dow Jones as it closed. Well, this is basically from midday, but as you can see, basically all the indexes are down except for the Dow Jones. We're just not seeing any strength in the tech. So kind of try to avoid some of the techs. I love the stocks in there, but NVIDIA, AMD, all these ones, I've been trying to trade them. They just aren't giving me any leeway. Right now, we want to be, it's a tale of two cities. Right now, we want to look at those resource stocks like the oils, and some of the fertilizer stocks are also very good. Shipping is good. The shipping, not necessarily the truck shipping. Here's the thing that's very interesting. This is very telling. The number of oil and gas rigs increased significantly this week. That's what Baker Hughes is saying there, the oil service company. And it looks as if with this happening, we're probably going to see a lot more. This means that the money is now starting to flow back into the oil patch. It's starting to flow back there. And one of the reasons why I doubled down on Oxy, OXY, is because of this. Oxy has a very large stake in the Permian Basin, which is right here in Texas. And this is definitely one that I think that you could definitely take a look at. Definitely take a look at. Now, as you can see, my buys are here, but it just popped today. Now it's off a little bit, but it was up about 7% in terms of price. But look at the volume. The volume is way up here at 13%. Now, will this be buyable on Monday? Don't know if that's the case, but look at this spike in volume. Just wanted to kind of indicate there. So what we are seeing is we are seeing some of the big funds come in to some of the oils. Now, of course, I talked about Shell. That's a large integrated company. SHEL is the symbol for that on the New York Stock Exchange. It's actually a Dutch company, but it trades on New York Exchange, and it has for years. It's well over 100 years old. Terrific company. Oxy is a little bit smaller company. They're more in the extraction E&P area, not as much in the retail as Shell is, but also definitely very good. Occidental is definitely one that you want to look at. Also, I have in my portfolio currently MPC. This is Marathon Petroleum. And why am I so interested in this? The reason I'm so interested in Marathon, as you can see, all these charts move in this upward direction. Notice that. Notice how this is. I want to compare this Marathon Petroleum. Take a look at this chart with Marathon and compare it to NVIDIA. NVIDIA is a leading chip stock company, but look at the chart. It moves in the downward trend. This is why when you're buying stocks initially, this is one thing you want to just do, just as a rule of thumb. Always look at the direction that it's going in. Now, NVIDIA is one of the top stocks in the semiconductor area, but right now the semiconductor area just is not as investable. Let's look back at MPC, which is Marathon Petroleum, and as you can see, Marathon and many of the other stocks in the oil and gas area, especially the refining, are moving up. Now, there is going to be a shortage, unfortunately, and I don't like the fact that there's going to be the shortage, but there's going to be a shortage of diesel fuel, and this is going to push many consumer prices much higher. So you want to concentrate on looking at companies that refine diesel. One of the companies, of course, that does is Marathon. Another company that I also own is a company called Sinclair. It's a smaller company, but the symbol is Dino, D-I-N-O. That's another one you want to look at. Why? Because it's not quite as good a chart as Occidental or MPC, but it's a good chart nevertheless. This is going to be reversing higher more than likely. It's currently at 38.92, but I suspect it's going to go higher. Why? Because this is where the money is flowing in the market. So that's the key thing. You have to look at that. Where is the money flowing in the market? Yeah. All right. Would AZO make a good bull call spread? That's a great question, Matt. Appreciate it. And for everybody out there, what a bull call spread is it's where you buy two option contracts that expire at the same time, two calls, an upper one and a lower one. You basically buy the lower call, and then you sell the upper call. You buy the. Let me just think of this as if I'm saying this correctly. You buy the upper and you buy the lower and you sell the upper, and then what you do is that if the stock moves up, then you will make money, but you'll be protected if the stock moves too far up with that other call. So you sell. You buy the lower, sell the upper. That's a bull call spread. Let's look at AZO, and there we go. AutoZone, boy, this is a great stock, man. You got to have some big money for this one, but the bull call spread is probably the way to go here. It's in the buy zone right now, so yes, there is a potential. This would make a potentially, by the way, Matt, this is make a very good potential bull call spread. Why? Because it's in. When inflation happens and recessionary times happen, the automobile parts dealers, the auto stores like the AutoZones and the O'Reillys and those kind of people, they do very, very well because people don't replace their cars, they fix them. And so AutoZone is the only thing with AutoZone. Love the stock, but man, it's an expensive stock, $28.91. Having a bull call spread might solve that problem. So that's a very, very good call there, Matt. Really, really good call on that. So thanks for that. Okay, we talked a little bit about the renewables. Doesn't the first world investment decrease costs for the third world, e.g. economies of scale and innovation? Well, yes, to some extent. I mean, the smartphone and the cell phone in general probably has made even a bigger impact on the third world than it has on the first world. But it's hard to say. Now, here's one thing I do know, and that is, and I've been an investor in Tesla. I had some Tesla up until about a week ago. I love the idea of the technology in companies like Tesla, but the problem is to sell in the third world, Tesla is going to have difficulty. Why? Because of infrastructure, and it might work in China, but I think that we're going to see oil and gas cars at least for the foreseeable future, especially in the rest of the world, especially in the rest of the world. I just think we're going to see it there in Mexico and South America and Africa. I just don't think there's going to be the infrastructure to charge cars. So I definitely think we're not out of the oil and gas business yet. And that's one of the reasons why I think you got to look very, very carefully at some of the oil and gas stocks. I just think they're going to be a very, very good place, at least for right now, with the inflation coming. So, I mean, everybody's going to be affected by inflation. I mean, it's going to cost more to drive. It's going to cost more to buy things at the grocery store. And that's going to be an issue for a lot of people. It's an issue for me right now. I mean, I go to the grocery store and I look and go, wow, this is a lot of difference. But you can mitigate some of that by taking your money and putting it into some of the oil sector stocks, because I definitely think they're going to continue to do well. Just an idea. Question from TikTok, and it's a question on the steel industry and what's going on there. The part of the reason the basic metals industry, like steel and aluminum and those things, are doing very well right now in the United States is because of the cost of energy. Now, that sounds fairly strange, but right now, Europe is very, very strapped. Europe, they made some very, very poor decisions with their energy. And, of course, they got rid of, in Germany, they got rid of their nuclear plants, they got rid of their coal plants. And now, guess what? They can't make any of those basic products like steel and aluminum. Why? Because they take a lot of energy. So part of the reason steel and aluminum companies aren't rallying in the United States is because supply is lessened. And also, remember, some of the biggest steel producing countries are Russia, Brazil, those kind of companies, and South Korea. And with higher oil prices, with higher energy prices, they become less competitive. So, if you have a U.S.-based oil steel producer like Cleveland Cliffs CLF, or possibly another other companies based in the U.S., they're going to do significantly better. Why? Mainly because they have access to hydropower, as in the case of the Northeast and the Pacific Coast areas, and also they have significantly lower they have that significantly lower energy cost, and it's more reliable. So they're starting to see a lot of orders. Because I wouldn't say the international trade is breaking down, but it's going to be more difficult. Supply chains are stressed. So things like, the basic metals like steel and aluminum are going to be sourced much, much closer to where they're going to be used. And that means that many of the domestic producers here in the United States, possibly in Canada, are going to do far better than they've been. Now, they have high labor costs, but that's going to easily be offset by the lower overall energy costs that they're going to experience over places like Europe. So, very interesting thing that's going on there as well. All right, let's see. If everyone's saying a recession is expected in 2 years, why invest now? Why not wait? Well, here's the thing. It's not a recession. We are not going to experience a typical recession like you've ever seen. Now, I'm old enough, unfortunately, to remember the Jimmy Carter years, when we had a President Jimmy Carter, and he was a very nice guy, very, very honest person, but very naive. And unfortunately, he caused what they call stagflation, which means that not only are the prices of everything going up, but the amount of wages that you receive are going down. So people are getting poorer. So what we're going to have in the next 2 years is a lot of people getting poorer. Now, you can just do nothing with your cash. You can just put it in the bank, and guess what? You're going to lose probably quite a bit of purchasing power that way. I would suspect that you're going to lose probably, well, right now the inflation rate is running, it's going to be over 10% this year. There's going to be over 10% inflation. Now, of course, the government won't tell us that, but the inflation rate is going to be over 10% this year. So let's say you have saved, you basically have saved $100,000 for your retirement account, and you think, well, everything is too risky to invest in. I'll just put it in the bank. Well, if you do that, probably by the end of the year, the purchasing power of that will be worth about $90,000. You will have lost $10,000. Now, if you invest very safely in a sector of the economy that's doing well, for instance, the XLV, this is the Spider Select Energy Sector ETF, where you don't even have to pick a stock, this probably will do better because we are going to have surging energy prices, whether we like it or not. And if you were to just take some money and put it into the XLV, you would not be getting this you would not be getting the hit that everybody else is. Let's take a look at the XLE. Oops, this is the XLE. This is Spider Select. Let's put it up there. XLE. This is the Spider Select. And this is doing very, very well. This is one. If you don't want to be picking stocks right now, this is one that you could, I think, definitely sleep at night by buying. It's currently trading at about $79 a share. It's called the Energy Select Spider. And let's see, did I get that right? Yeah, Energy Select Spider. Okay, I have to make sure that I'm giving you the right information here. This one will benefit from inflation. This will benefit from inflation. This is an ETF that will benefit from inflation. The price of oil is going to go up. The profits from the oil sector are going to go up. So this one will do well. And, this, instead of putting your money, let's say putting it in a bond fund that everybody thinks is so safe, that's going to lose money in the next year. I suspect that the XLE will make money. So that's just something that, that's a way that even as a small investor, you can protect your savings. I really recommend it because we are going to see, unfortunately, we're going to see a lot of damage with this kind of inflation. It's just inevitable, and it's just one of those things. Let me show you the stocks that I'm currently in to kind of get an idea of how heavy I'm in some of these some of the oil and gas sectors. I own OVV. This is an oil company. I own a company called Shell, of course, SHEL. I own that one. I also own Oxidel Petroleum. I own I own Novo Nordisk. But I also own Velco Energy. So basically, I have 3 or 4 of the oil sector stocks. I also am very heavy in other stocks that will benefit from inflation. Eli Lilly, LLY, one of the biggest drug companies in this country, they're going to be able to pass along a lot of their increases because people in this country don't pay for drugs directly. They pay through insurance. So they're going to just pass it along. And so this company probably will do well. I'm also in XLV, which is the Spider Select healthcare ETF. That's probably going to do well in a high inflation environment. Question about what about lithium? This is coming from let me see if I can see this. Yeah, this is coming from Leland's 74 on TikTok. That's a good question. There are several good plays in the lithium area. There's a company called Lithium Americas, which is definitely worth looking at. But I think that really the best. So it's called LAC, Lithium Americas Corp. It's actually based in Canada. It's been pulling back a little bit as of late. So it's not. I wouldn't buy it at this instant. Because it's pulling back to the 10-day line. But this is one you want to put on your watch list called Lithium Americas, LAC. I would not buy this one right now just by the fact that it's pulling back. Probably the best bet in this area is Albemarle, ALB. And Albemarle definitely is, they mine a lot of lithium. Now, right now, you can't buy Albemarle either because it's trading below that 200-day line. Nothing really good happens below this black line here, but it may make a move up. So right now, in terms of lithium exposure, the best thing to do is to just wait. Watch list LAC, watch list Albemarle, ALB. And I think that you might be very, very pleased when they move higher. But don't buy them now. They're getting set up and getting ready to go. All right. Jimmy, dollar cost averaging is to Google pre-split. Your thoughts? Good question. I was in Google and I had to cut back on my exposure to it. It just wasn't performing as well as I would have liked it. This is going to, the split is going to make a difference in Google, but I just can't buy, I just can't hold a company that is pulling back. As you can see, I was in it here, and this is when the split, this is when the split was announced, and boom, it started to go down. I had to bail. I had to bail on it, and I did. I bailed. And so I'm just kind of waiting, biding my time. It went up above the 200-day line, but unfortunately, unfortunately, it's down. I don't like the dollar cost average. I'll be honest with you, because I don't like to average down. I just don't. I like to average up, but not down. So I would not be a buyer of Google right now. I love the stock. I absolutely love the stock, and I had large positions in it. This is where I actually incurred some of my biggest losses this year, was in Google. So far this year, I have not done well trading Google. Now, that may just be me, but what I think it is that I'm not trading in the right area. I need to stick to my guns, and my guns right now are telling me oil and gas is the place to be, and not Google. It's just that way. High PE stocks just aren't doing as well as other areas of the market. It's unfortunately just that simple. I wish it weren't. The market will be up next week. I think it's very likely, because I think it is starting to turn, but I think it's going to be a bifurcated market. I don't think that. I think that the techs are going to have to wither a little bit more of a pullback, and before we can go up. So again, I'm concentrating right now on the oil and gas area primarily. Why? Because that's the area that I'm seeing as having the most strength. So that's kind of where I've been. It's not because I'm in love with oil. It's just because that's what the charts are saying. The charts are saying that we need to be looking at oil. Okay, well, thank you very, very much, everybody. Sorry I had the technical difficulties. I just sometimes it just Fridays are just not working out that good. I'm going to be back on Monday at 5:00. If you're, I'm going to try to be putting together a list of good oil companies with high relative strength that are possible buy candidates for next week. But in order to get a copy of this, in order to take a look at this, you need to be on the free Action Trade Alerts. But it's free, so that's the good thing. All you have to do is go to www.Dallas Trading Floor, and you'll be able to you'll be able to get on the list. I suspect I'm going to be putting it out Saturday night, so you have a little bit of time to get on the list if you're not already on the list, for the list of strong oil and gas stocks. This just is telling me that with this inflation, this is going to be where we want to start really looking at stocks. Now, the great thing about the oil and gas area is that it's all over the place. I mean, you have from expensive stocks like Shell, all the way down to stocks literally that trade under $10 that actually are very good stocks. So it's an interesting area of the market, and it's definitely one I think that we can make money in. That's one I'm going to try to be really oriented toward. Last year I was heavily tech, and I still love the tech stocks. I've made a lot of money in techs, but I think right now, you got to listen to the market and what the market is saying. Lots of inflation is coming, and with lots of inflation, the place you want to be is the most inflation, the most inflation affected areas of the market, and that's oil and gas, because everything that from retail to everything else depends on oil, because that's how we get things to market. So if you are an owner of some of these oil and gas companies, especially domestic ones that are drilling in places like the Permian here in Texas, I think you can do very, very, very well. So what about wheat stocks? Well, actually, wheat, WEAT, it's actually not a stock. It's an ETF. Let's look at wheat, WEAT. You are absolutely right. There's probably going to be a famine, unfortunately, because unfortunately the way it works is, and this has been through history. We have a pandemic. We have a outbreak. That's usually followed by war, unfortunately, and then famine. So those are the what they used to call that the three horsemen of the apocalypse. The three horsemen of the apocalypse. So wheat could be a good play. Now this is an ETF. So let's take a look at it in terms of, I haven't really looked at this one in a while. It's trading right about $10 and about $10.57. It's really come up a lot. I mean, this is a way you probably could participate. Not a particularly strong checklist, but if you want to put your toe in the water, I don't see why this one wouldn't be good. Now, here's the problem with this fund. They may not have enough wheat to buy because because of the way the quotas are. This is going to be this is going to be a good year for the countries in the world that can produce wheat. Of course, that's not going to be Ukraine this year or Russia, but Argentina should do well. Of course, they're on a different cycle than we are here in North America. Canada wheat companies should do very well, as well as U.S. But the biggest issue right now, the best way to play the wheat deal is not to play the wheat directly. And the best way is to buy fertilizer stocks. Why? Because fertilizer has gone up 3 times in price. And in order for the farmers to get the kind of yields that they need in their wheat crop, they're going to have to fertilize. And that means the fertilizer stocks. So a better way, a pick and shovels way of playing the wheat and the grain business is to buy fertilizer stocks. Now, currently, I'm in a stock called NTR, which is Nutrien. And there's also other good ones like CF. That's CF Industries. That's also quite good in this field. So instead of playing wheat directly, what I would do is I would play the fertilizer stocks, and I actually am. Let's take a look at NTR Nutrien. I think that is still viable, and this is a little bit. This stock has real legs. I mean, I think this is going even higher. I've been adding to my position in Nutrien, and this is a good way to play the grains because, of course, they need to have fertilizer. Now, here's the thing about fertilizer that people don't really understand. Back in about 1915 or so, they invented a process which changed the whole world and made it so that huge populations could exist. And that is a German company called BASF invented a process to take natural gas and turn it into ammonia, which allows farmers to fix nitrogen into the soil. That's why the price of oil and gas is so critical, because even though we're talking about wheat and we're talking about fertilizer, natural gas is involved. So that's another one you want to possibly take a look at. I agree with you. Well, you could definitely short it. It is a little overbought. I agree with you. I do. I mean, I wish, but what I'm doing is I'm just pushing my stop loss up, and if it comes back down, I'll sell out, and then I'll wait for it to pull back and buy it again. I just think that these extraordinary times are showing us that that some of the fertilizer stocks are going to do very, very well. Now, I was stopped out of CF, and that was overbought too. Very similar situation. So your point, I take your point. It's a good point, but I wouldn't short. I don't think I would short the fertilizer stocks right now. I don't think I would short the fertilizer stocks right now because we're in these extraordinary times. But I agree with you. I think it is overbought. You're right. I mean, you definitely are reading the chart right. But there is such a demand for fertilizer in this world. There's only a few companies. Mosaic, MOS, that stock has gone up something like 70% since the first of the year. It's one of the top performing stocks out there, and that's also in the group. So, what I'm doing with these is I'm trying to get on the escalator, and then as it moves up, I'm pushing that stop loss up so that when it pulls back, and they always will pull back, I'm selling out hopefully at a good profit. And I've been doing that for a number of months on these fertilizer stocks, and it just seems to work. So they are volatile, though, and they are very volatile. They are very, very, very volatile. So you're absolutely right about that. You're absolutely right, and I don't disagree with you. Buy MOS, absolutely. I think Mosaic. This is a good stock. Unfortunately, this stock. I say unfortunately, we can make a lot of money here. Everybody, we can make a lot of money here, but we have to be careful. We have to look at the chart on this chart on Mosaic, if you're looking on TikTok, you can't see the chart, but I am broadcasting it on YouTube. Unfortunately, my link isn't working that well. But you're right. I mean, Mosaic is a strong stock. It's over $70, and it's literally, at the beginning of the year, this stock was selling, for under $35. And this is a good stock. This isn't some fly-by-night company. This is a real company with a very, very strong, with very, very strong potential. So you're right. I mean, Mosaic looks very, very good, as do some of the other ones. So I totally concur with you on that. Totally concur on that. Last night it was 1:30. Let's see. Oh, NTR. Let's take a look. I just want to take a look at NTR. Let's see if I can. Okay. Oh, Nutrient. Okay, yeah. Well, it might have. Was it that much in the after hours? I don't think it was. I don't think. Well, anyways, I may have it wrong. I may have it wrong. Was it AGM? Interior. Okay. All right. So let's see. A little overbought. Mosaic. RXT. Let's look at RXT. Look at this chart. RXT. Let's take a look. Looky. Rackspace. I wish I could recommend this. Man, I wish I could recommend this. This one, based in San Antonio. It was a tremendous company. Then it went private. Then it came back public. I still think it's a great company, but the problem with it right now is that the trend just isn't your friend here. I mean, so I would not recommend Rackspace, even though it's a great company. It's a great company. I don't think it's a great stock right now, only because it's in a downward trend. And I in the future, I think definitely we're going to see it do very, very well. But right now, right now it's just not doing well. Now, it probably should be doing better because it's got a huge growth rate and it's got a PE ratio of 11. But, the techs just aren't performing as well. So what I would do with this one, I would watch list this one and, just watch list this one. I wouldn't be a buyer right now. I want to see it reverse. I don't want to buy anything below that 200-day line. It's too difficult. It's too easy to make, to get your timing wrong if you're buying below the 200-day line. So I would not be a buyer of Rackspace below the 200-day line. I'm not dogging on the stock because I think it's a very good company, but I don't like the chart action. So, and I'm a technical trader. I mean, I look to see, I buy on technical factors and fundamental factors, but I sell on technical factors. So I'm always looking for the best technical setup. What I'm looking for, and is I'm looking to see where in the market the capital flows are continuing. Right now, they're still continuing to the oil and gas. So you just got to look there. Oh, RTX. Okay, defense stock. Okay, Raytheon's different, obviously, because the defense, they are going to get some orders from Europe, and this is a totally different chart. So sorry, I guess I got it wrong. For some reason, I thought it was Rackspace that you were looking at. And again, don't dislike Rackspace, but Raytheon is in a totally different category in terms of stock. It's coming right up to a buy point, which is really interesting. Let's see if I can go to the daily chart. Let's see if I can give you buy points on this one. I was in this one, and then I was in it too early, and then I sold. But now I start to think that we're going to get some support at the 21-day line. So let me just draw a little trend line here. I'm going to put a trend line on this one because I do think that this is setting up. I think you're right, and so I've got a trend line here on this one. Let's see if I can. We're having this software that I'm using has some difficulty with some of the trend line. Some of the trend line things here. So see if I can set it on the. Yeah, we go. Okay, so now I've set it. I definitely think we're going to bounce off the 30-day line. So let's look at the technicals on that to see. Yeah, I mean we're right at the 10-day line, right at the 21-day line. You could start nibbling on it here. You could definitely start nibbling on it. I'm going to put this down on sort of my hot list because I like Raytheon absolutely. By the way, as a full disclosure, I did for a while actually work for this company, believe it or not, a long time ago. But it's a great company, and because they sell missiles, they're going to do very well. Europe is going to have to buy a lot of what they're selling because they make the Patriot missile battery, and they're just going to have to buy them. So Very good call on that, Raytheon. I'm going to look at this one next week. I'm going to put this on the watch list. It looks like it's going to reverse higher, and this one could be a good buy off the reversal. It's below the buy point. Currently, the buy point for Raytheon right now. Let's see if I can put it in there. Let's see. Okay. On the flat base, there is a 104.34 buy point. So we could start buying it here below the 104 level. We could definitely do that, and then you can buy it up as it comes through 104 up to about. You're going to be able to come up to about 110, 109. So you can probably start buying it here from about 100 up to about maybe 109 for Raytheon. I definitely agree with you. I think that we're going to see a lot of strength there because they're going to get orders. Now that's really fundamental analysis and not technical analysis, but the technical action on this looks good. It's coming off a flat base, so looks pretty darn good. Thank you very, very much for putting that out there, Doc. I appreciate it. I agree with you on that as well. MMI, let's look at MMI. I want to see if I can get a, commercial real estate. I wish I could be more bullish on commercial real estate. This was moved up past the buy point. The buy point on this one, was 52. Was 52.28, moved all the way up above 55, and then it went back down. So I don't know. I can't get excited about this area. There's going to be, because of inflation and stagflation, one sector of the economy that's doing very poorly right now is commercial real estate. And even though Millicent Mellencamp does not own commercial real estate, they manage it, and so I would be really careful about this one. This is a large real estate broker in the commercial area, and so I think you just got to be super careful with this one in this area. I don't want to be in it. I don't want to be in the area. Just that's the way I'm looking. Dream told me to $100 in 1 year. Okay. All right. Well, thank you. Well, thank you, everybody. Let's look at CA. Is this what I think it is? Excuse me. All right. Let's see. Nope. Let me see if that's pulling up. No, it's not, unfortunately. Okay, well, everybody, thank you for bearing with me through this technical difficulty. If you want to get on the Action Trade Alert, super duper easy to do. Just go to www.Dallas Trading Floor. I'll be back. Let's see, I've got one more here. Is IMTE a buy right now? Let's look to see if it is. IMTE. MediaTek, no. No. Unfortunately, no. I just think no, it's not a buy. No, it's not a buy, so no. Not a buy. So that's kind of, you gotta. So this one's not a buy. So MTE, Integrated Media Technology, nope, not a buy, unfortunately. All right, everybody, thanks for watching the show. Oh, wait a minute, we got one more question here. I needed it to close above 72.04. Okay, well, good. I hope that happens for you, and we'll get you set up. So, but not a buy right now. So I will be back on Monday, and I hope everyone has a really nice weekend. I've got going to be working outside, so it's going to be nice here in Dallas. Going to be planting flowers and trimming bushes and that kind of thing, so it'll be kind of fun. But I will be back. I'm going to try to put out the action trade alerts for oil on Saturday, but you got to be on the list, of course, and that's www.Dallas Trading Floor. So Until then, till 6 o'clock, till 5 o'clock on Monday. Happy trading, everybody.